Hello there, Hector Daville here. Well, we've just left the theory behind. We've learned the basics as far as news, the news items, the economical calendar, etc., etc. It's time to get our hands dirty. It's time to start trading the news. Now, from this moment on, you have two possible options. You can either avoid the news altogether, or you can indeed blend the news with your standard technical analysis trading system. All right, those are the two possible options you have as far as trading the news, or as far as treating the news into your daily trading routine. Again, you can either avoid them or you can trade them. Now, I would assume that since you are watching this module, since you are watching this very video, chances are you indeed want to trade the news. You indeed want to blend them with your standard technical analysis trading system, right? That's what we are going to be focusing on the upcoming videos. Now, in case there is any chance you just don't want to include any extra element of risk, any extra element of confusion into your trading system, my advice is to simply avoid the news altogether, because the news do indeed add a touch of extra confusion, an extra touch of risk. And therefore, I do understand that some of you may just not want to get involved with the news at all. Okay, I'm going to give you both options. Right now, I am going to explain very, very briefly how to avoid the news. And from that moment on, we are going to be entirely focusing the next following videos and the rest of the module with actually blending the news with your technical analysis. Okay, and then it's up to you to decide which of the two routes you are to take. Okay? Okay, so how do you avoid the news? Well, the best possible way, especially if you are an intraday trader, is to set a 2-hour blockout period around news announcements. And now, what does that mean? Well, basically it means that if you have if we have an important news announcement scheduled at 3 p.m., you set that 2-hour blockout period, and therefore you will not take any trade from 1 p.m. onward. Any trading signal your system gives between 1 p.m. and 3 p.m. is a trading signal you will not take. Alright, you will not take any trading signal within that 2-hour time window. How is that? Well, as you probably know, the news announcements can indeed create extra volatility in your charts, alright? And the worst possible thing you can do is to enter a trade right before that volatility kicks in. If you take a trade right before the news announcement, you are risking the fact of having your stop loss being hit, your stop loss being knocked out, and therefore knocking yourself out of the trade without having given that trade a fair chance to perform. Alright, so that's why you want to avoid taking trades immediately before that news announcement. Again, 2 hours is usually enough. Alright, do not take any trade just before a news announcement, because again, you would be incurring into that risk of having that chaotic, random, unpredictable price spike hitting your stop loss right away. Okay? Now, what about if you took a trade before that 2-hour time limit kicked in? Okay, let's assume you took the trade at 11 a.m. All right, 11 a.m. And therefore, by the rules, you were still okay to take that trade because you were not within that 2-hour time window. So, let's assume you took a buy entry. That's where you place your stop loss, and up there is where you place your profit taking level. But, however, by the time the news are to be released, price has not yet hit either your target level or your stop loss level, and therefore you are still running that trade in the market. Okay, that trade is still open. How do you deal with that? What do you do with that trade immediately before the news announcement kicks in? Well, if that's your entry, all right, and obviously by the time the news announcement you have some profits, some pips to show for. Okay, your best course of action is to cash out a portion of the trade, let's say 50% of your profits immediately before the news announcement kicks in, and then simply trail your stop loss up to break even on the remaining 50% of the position. So if you were trading 4 lots, you close 2 lots right there, and then on the remaining 2 lots you set the stop loss to entry point. So if price spikes down, you will have completely offset the risk on that trade. Okay, if price spikes down, you will make some profits on those 2 lots, and you will score no loss on the remaining 2 lots. So that's a win-win situation. In the other hand, if price spikes to the upside, you will have scored a small win on 2 lots and then a large win on the remaining 2 lots. So that's even more a win-win situation. Okay, that's the course of action. However, in the other hand, what about if instead of taking your trade there, you took your entry up there, and therefore, you have no profits to show for by the time the news announcements are to be released, or even maybe you may have some minor losses on that particular trade just before the news announcement kicks in. So what do you do with that type of trade? Well, I am afraid that since you cannot either trail your stop loss up because you just don't have any breathing room here, and B, you cannot close out 50% of the trade for some minor profits because, like I said before, you have no profits whatsoever to show for, I am afraid that the only possible options that you have left is to simply manually close out the trade altogether, even if it's at a small loss. Again, regardless of whether you are sitting more or less at break even, or whether you have some minor losses on that particular trade, your best course of action is to simply close the trade altogether. How is that? Well, the thing is that no one knows how the news is going to spike price. No one knows whether the spike is going to be up and therefore in your direction, or down and therefore against your direction. Since you don't know that, it's basically like flipping a coin. It's a 50%, it's a 50-50 chance, all right? And therefore that would be like gambling. Now, do we really want to gamble our money away at the forex markets? Do we want to treat our forex trading as just gambling? Well, obviously we don't. We always want to trade with a system. We always want to trade with an edge over the market, all right? And since this is a 50-50 chance, you have no edge whatsoever. So again, the best course of action is to bail out of that position. Close out the trade manually altogether. Tip your hat to the market. Say thank you very much for the chance. This is not my battle. This is not the battle I want to fight for. All right? And get out of there. Right? Get out of there even if it's at a small loss. Anyway, that's how, in a nutshell, you avoid trading the news. Okay? Just remember that 2-hour blockout period, guys. You don't want to trade in there. Now, since you are watching this video, I will assume that you indeed want to trade the news and you indeed want to blend them with your standard technical analysis trading system. All right, that's exactly what we are going to be covering from now on. Different strategies, different techniques to trade and obviously profit from the news announcements. Okay. Now, before we get started, there is something that I really want to get across, and that's that the news announcements, trading the news announcements, and therefore the techniques we are going to learn from now on are way more significant to intraday traders, right? Traders who trade off the shorter time frames. As I was mentioning before, the news announcements can easily spike price for 40 or 50 pips, even on occasion a little bit more than that, all right? 40 or 50 pip price spike can be enormously significant if you trade off the 1-hour chart or the 30 minutes chart, or even more so if your chart of preference is the 15 or even the 5 minutes time frame. However, if you take your trading decisions based on the daily, weekly, or even monthly time frame, a 50 pip spike on your chart is just going to be a random wiggle, it's just going to be a random little move on your chart, but at any rate, it should be anything that you should be overly concerned about. Okay, that should not be something that could endanger your position, right? So if your time frame of choice is a daily, weekly, or monthly time frame, you don't really need to be paying any attention whatsoever to the news announcements. You don't need to mind that 2-hour time window at all. You don't need to blend anything into your standard trading system. You can trade your trading system independently of whatever happens on your economical calendar, right? Unless it's the interest rates news announcements. As I was mentioning before, the interest rates can easily spike your price for up to 200 pips, and 200 pips is indeed a large market impact regardless of your time frame. Okay, so unless you are facing the interest rates news announcements, if you are a long-term trader, just forget about the news announcement. It's just something that falls in the realm of intraday trading. Alright, now, with all said and done, I'll be waiting for you at the next video with our first strategy as far as trading the news items. Alright, cheers!